Hi, this is Randy Finney with the right side of the chart, and this is a mid-session update for Friday, February 6, 2026. It's 12:08 p.m. Eastern Time, so I'm starting the video, so I want to make sure I get one out well in advance of the close today, give you my thoughts, show you what I'm watching. As usual, we're going to start out with the equity market. So this is QQQ, as I mentioned in the comments last night, and I always encourage, if you're new to the site, if you're actively trading or involved in a particular trade or just kind of want to, keep a close tab of what's going on, a lot of the follow-up comments I'll make on whether it's something that I'm seeing and posting or questions are asked, I'll post those in the comment thread. So I encourage you to come in the site and check those. Again, if you're kind of, especially in a fast-moving market like this, a lot can change. So this is QQQ. Got that chart out to you this morning and made mention of it last night. Let me turn that back on. Go to pre-post. Always show last two sessions. So as you can see, and that was in that post I made last night when someone asked my thoughts about a bounce. I said, yeah, I think they're pretty good. Unless you're new to the site, you've heard me forever and a day, gazillion times talk about this 589 level, which is the key October 10th lows. Was an important level to me. Big red breakdown candle. We hit the first price target there on QQQ. Bounced off that level. I'm sorry. That was another trade. We did have that, but on the 60-minute chart, we had a target there. This one we had multiple entry points, and it was hit again here. And as I've been saying for a long time, the markets are not going to go down substantially unless those levels are taken out. But the most important takeaway is they're very good support, excellent support. And you can see in the post-market session yesterday after the close, we drifted a little lower, and we made about a perfect tag of it. What is that? The low of 587.44. Again, remember when you're looking at a nearly 600 point security. 1 point is a mere fraction of a percent. So that's about as close as you get there. It's the bottom of that purple trading range. Let me turn those off now. We don't need the pre and post trades. And so that's it. So that's where the reversal came. And that's why that's one reason among many I trade futures. And I also watch the charts before and after hours. I can't tell you how many trades over the years that I've been able to exit or enter in the pre-market or after-hour session, because that's where the reversal comes. So, pretty much, futures are trading around the clock. And a lot of traders now are very active in pre-market session. We still have these antiquated 9:30 a.m. to 4 p.m. regular session times where most of the world, especially those folks on the East Coast, are up long before that. And folks, especially those out on the West Coast, are want to trade long after 4 p.m. Eastern. So, or of course, you've got traders around the world as well. I've talked to a lot of traders that live in England, Australia, Canada, other places on the other side of the world that love to trade the U.S. markets. Okay, let's move on. That's that level. Where we go from here, all I can tell you is that on the daily chart, the midpoint of the range is the level, but I also have on the 60-minute charts, and I did just get those out to you right before I started the video. This is QQQ. There's that big 607 level. We had a day trade op right here, bounced up to it before. We had another day trade op I gave you there, bounced that one up. Those were good for quick 1% pops. And then this is, again, it's the same resistance level. And you can see it's marked pretty well. It's that major reaction low. There's a big old gap right here. There's reactions from above there. I've had that line here for a while. Pretty important level. Either way, I'm going to show you why I think this is an objective short entry, re-entry for anybody that covered at the lows. Remember, this is the regular session trades. This is about, we hit the bottom of it in the post-market session yesterday. And then I did just also get out, that's another good example of coming into the site. Under that post I gave you with the QQQ hitting that level, I also gave you for futures traders, those of you that prefer futures, use for the NASDAQ 100, that would be either NQ or the mini contract MNQ. It's about, I think it's 1/10 of the leverage factor. And that one had just hit right before I started, or we're coming up to. In fact, let me get to the live chart. That's a comparable resistance level, about 25. I have the number 25,087. We'll call it 25,000. Again, you're talking a 25,000 point security, so you can round off there a bit. And that's it right here. That's the 60-minute chart of QQQ. The one I got out to you earlier today was a 120-minute chart. I watch multiple time frames, but on my swing trade, my go-to swing trading time frames are typically the 60 and 120-minute charts. Now, one thing after a big move down that I really like to see in order to, especially in a bull market, to cover all shorts and go long for a next trend trade up more than just this is just a reflexive bounce is what I call it off that key support level. And I still think that support level is going to go, and I think it could go next week. So now if we keep going higher, you can see there's other resistance levels. And remember, at the end of the day, let's not forget, we just punched down and hit the bottom of that trading range. And when you're in that trading range, the MO is typically you buy the bottom of the range, right? And then you sell the top of the range. That's how it works, right? So you get to the bottom, you go up to the top. There's some midpoint activity there that acts as support and resistance. But I've shared my thoughts with you that this sucker's getting long in the tooth. These trading ranges in both QQQ and SPY. Let's not forget the S&P 500 as well. And sooner or later they're going to break down. So SPY, I just have to kind of extend it out here. SPY's tried to make a few failed attempts to get above the range. And yesterday, also in the post-market session, we were at that midpoint line I gave you before. I have it at 673.79. And that's also support. And as I said, so that once you're in the upper half of the trading range, that's the level that often acts as support. So that was the reason why yesterday I favored a bounce after the close over in the overnight session and into today, as I stated. And that's what we've had. And it's pretty much, I think, run its course. You also have a back test of this trend line here on SPY off the lows. And that's it. Okay. So that's if I only studied and traded the markets in a vacuum. I know a lot of traders do that. They'll focus if they trade the SPY or QQQ or the futures. That's probably all they look at. I look at everything else, as I often say. An index or a sector is simply a sum of its parts, and I take that even a step further. The NASDAQ 100 and S&P 500 are simply a market cap weighted sum of their parts, right? They give a higher weighting. In other words, you don't add up all 100 stocks in the NASDAQ 100. It's not a sum of those. It's not the return of the index isn't. It's the return of the index is due to the equal weighting. So the bigger the market cap is on a stock, the bigger impact it has. And you can see that there. I've covered that with you in the past, but last updated at the end of the year on December 30th. And the Mag 8 made up 45% of the entire return. So you take the other 95 stocks, and they barely accounted for half of the returns, just over half of the returns of the index, just these top 8. And if you include all top 10, I think you're right at about 50%, give or take. All right, so that's that. But let's dive into those guys. So NVIDIA isn't going to report until later this month. They're an outlier as far as the MAG stocks go. And where is it? Oh, it's on the weekly chart. I gave you the potential head and shoulders pattern right here somewhere. There it is. Oh, yeah. So we hit that neckline yesterday, which was support. So this thing's playing out as expected so far. Remember, that's the neckline is support, and then the sell signal comes on a break of it. And it wasn't just the uptrend line, which is also the neckline for that potential head and shoulders pattern. Now the pattern's fully developed. So all you need now, like any chart pattern, is now the sell signal, which comes on the break below it. All right, and then that's the measured target. It's going to take you down to around 135 or so. And again, the projected measured target, which is the widest part of the pattern added to where the pattern breaks down, assuming it breaks down. So we don't have that yet. This is the biggest stock in the NASDAQ 100 and S&P 500 as far as market cap weighting. So, it's going to need to break down to get the any significant sell-off in the markets going. And it's something I still very much expect and anticipate, but it'll be an additional check mark. You know me with my little check marks lately. That's why that's still a question mark right there. This is a daily chart of it. And you also have a trading range, but you have a confluence of support, the 200 days, the neckline of the head and shoulders, and everything else. So let's, again, I don't expect fireworks from it, but if the rest of the MAG 8 take it down before earnings, yeah, it could certainly break that neckline and start to play out. And then earnings would just probably be the final, if it's a disappointment. And we've seen what's been happening to companies after reporting. They've been taken out to the shed lately, even on blowout quarters. So I'm just going through the MAG 8 here. This is Apple. My thoughts here, when opportunities are there, we'll swing trade these little guys. We did 1, 2, 3, all three targets at the 200 bounced, which was the most likely scenario there. But from a longer term perspective, Apple still looks like it's going to head lower, quite a bit lower in the coming months to years. It just right now, it's pushing back, kind of making a run near, not all the way at, but close to those highs. You probably give it a little uptrend line. Yeah, you can. And so it's going to need to break that to spark another leg down. Alphabet, so they reported they were one of the strongest of the MAG 8s recently, but we had a sell signal here and a breakdown. We back tested, as I talked about, for weeks, back testing the trend line right up before earnings, started getting rejected there. That gave me that second plus mark, especially since it's post earnings. So that is check mark 1 was a breakdown. Check mark 2, remember, back testing is not a sell signal. In fact, it's the contrary. You can continue to back test. So I like to see that impulsive rejection, which we got. That gave me the second check mark. And the next check mark will come on a break of the recent lows, about 313 or so right there. You can see that's price support. And then these are your targets. And I'm still on this one. Honestly, it's, you probably get some reactions off some of these levels, but it's more of a tuck away trade. I would just hold out for the prize. I think this thing, once it takes out that level, and especially, guys, again, hear me when I say this, QQQ and SPY are going to have to break those yesterday's lows pretty much. And then QQQ will come back in ultimately down here to the 200-day moving averages. Probably be a relatively quick ride once it gets going, once the NASDAQ breaks yesterday's lows. And that's going to be a total drop of about 26% from the back test right there. So anyway, the check marks there. And with, of course, like I said, additional check marks pending. You still have the market in the trading range. So, unfortunately, it's still not that all-in moment. And like I said, with this volatility, if you can do it, and I try to give you as frequent updates as I can. It's not so easy when things are changing. Markets are very fluid right now, dynamic, as I often say. Therefore, so is my analysis. But when I see these levels like I did today, I'll get them out to you and let you know that there's no guarantees whether this, shorting or re-entering a short on the NASDAQ here will work. But it's objective. That I can promise you. I believe that. All right. So Microsoft's still below. It hasn't been able to regain that trend line. I'm talking about this right here. You have a primary, a long term. It's very long term, actually. I have it drawn off. Let's see, go back here. Comes off the late 2022 lows, this trend line. So you're below it. That's a big fat check mark until unless Microsoft recovers that. I have it here as a question mark. That's supposed to be a check mark. You can see it right there. So again, I'm factoring this in, and so come hell or high water, I will be going home short this weekend. I did recycle back into some shorts that level I just gave you right before I posted this, started this video, and these are the reasons. So that's a big fat check mark on one. Amazon as well. Amazon, we had quite a few. We had, first the breakdown and backtest of this primary. That's a long-term, well, not long-term. It's pretty long-term, early beginning of 2023. So it's a 1, 2, 3 year trend line. I think that's pretty significant. Breakdown and lost to 200s. Backtested the trend line, backtested, and finally rejection. Then it took out the secondary uptrend line, this minor uptrend line right here. Another check mark. Then it took out the 200 days. That's green. That's a check mark. And now earnings are out of the way and it's down. So that's another big old check mark. So this is the lights out level for Amazon, 160, 80 or so. We'll call it 160. So it's got plenty of meat to get there. But remember, it's below the 200s right there. Meta again, you had check marks here, break of that uptrend line / rising wedge, then a break of the 200s. Tested them, regained them, but so far, again, I always say if you have to squint, give it the benefit of the doubt. Let me turn off all the levels here, the lines. So you can see this is your 200 simple moving average, 200-day simple moving average. The red's a 200 exponential. As of now, you're below both of them, meaning this was just a whipsaw back above them. It was an earnings-induced whipsaw. Remember, earnings reports give you what I call noise, and you need to attenuate that signal, kind of sit back, let it, let the dust settle. You get order imbalances and all this stuff. And so I can put it too simple. With each tick lower, especially on a break of today's lows, it's going to increase the odds, help solidify that this was a whipsaw, i.e. a false breakout. And remember, that's bearish for many reasons. Simply, number one is traders, will recognize and use these 200 days where you should be short or out of your longs when the stock's below them, bullish when you're above them. They help define trends. The other thing is, as I said, when you take it back, you suck in a lot of new longs there. Traders will buy a break above the 200s, and then when you start to lose them, then this is where their stops are and should be. Not everybody's going to have the same exact stop, but the further you get away through here, the more those stops you're going to hit, and the more it's going to solidify that. So again, we're in close enough proximity. Give it the benefit of the doubt if you want to. Just something to watch for going forward. And then next up, Broadcom, they're not going to report for another month, and they've just been grinding around here. You really need to take out the 200 days. You can see they're pinching together, the exponential and simple. You had a almost perfect test. Again, daily chart. So this little thing right here, we call it a candlestick shadow, aka wick. I'm sorry, a tail when the shadow's down below it. It's a wick when it's above. That just means intraday you went. And all that matters is it sticks a printed a close right back on the 200s, and it's above them now. So you need that level to go. So again, guys, to reiterate, it's not an all-in moment. I have a lot of check marks, but not all of them. All right, this will be another big one. And you've got plenty of real estate between today and earnings. It's a whole month, so this guy could break down. We don't have to worry about a breakdown, being a whipsaw, unless you get within a couple days of earnings there. And then last but not least, Tesla. We had check marks here. We had a nice clean uptrend line, breakdown, sell signal there, then a more significant, larger uptrend line right there, breakdown back test. That was check mark number 2. And then I have a red question mark here because we need to break those 200-day moving averages. And so far, Tesla made a perfect kiss and test, a successful test of the 200s on the pullback. So that is what we're waiting for. And, I think it could come next week easily. I mean, we're in such close proximity on these, the ones that I'm showing you that are right at or just tested the 200s or key support, that it could come easily on a gap down on Monday as soon as that. Or anytime next week, or we may have another, buyers are coming in, they're going to buy these, and we could be looking at another multi-week, even multi-month bounce that could possibly take the indexes to another marginal new high. Again, so if I'm a little bit wishy-washy, it's only because the charts aren't that clear. I'll give you full convictions, strong convictions when I have them. And I'll also tell you which way I think it's going to go, and that's why I think, it's at this point in time, based on a lot of these guys breaking down, not all of them, but most of them, or enough of them, I think it warrants some, swing short exposure into the weekend. I think the risk of a possible big gap down over the weekend and a swift move down that you would probably not want to chase if you're not already in is larger than a big, huge pop-up. Now, anything's possible. Doesn't mean we can't have a big pop-up. Probably takes some catalyst to do it, but All right, that's that. And if we do, like I said, so a lot of these guys have also that not only have support just below them, but quite a few have resistance above. Like go back to Microsoft, for example, and Microsoft is a case of one that's below that primary trend line there. So any bounce back to that, it's going to be resistance, and so that's one scenario. If we do bounce next week, look for some of these guys to bounce into resistance. If a lot of them start taking back those resistance levels they recently broke, then that's bullish. And that would help support that case for, the software stocks, which I still think have, even if the Qs drop, they're probably going to outperform. So let's see that Palantir, just because it's been a crowd favorite. Yeah, that one, it's not a Mag 8, but it's certainly well below the 200 days. We had sell signals back here, breakdown, back test, divergent high, secondary trend line break, minor trend line break, and then you can see here recently the 200s, red and blue lines have broken. So, it's kind of a lot of the high flying stocks lately, crowd favorites, are breaking down. We just need some additional sell signals, and otherwise, we're in that grindy, choppy market, and that's why I'm getting these frequent updates out to you. It's a trader's market. When the VIX wakes up and stocks start going down, some are going down, some are going up, there's money to be made as an active trader. You'll blow away an investor who's, even something like this. You've gone nowhere in this stock now. You've gone up I'm talking for, almost a year now. You've gone up, down, but where we're at today, and Palantir is almost exactly where we were. If I take this line right here, going back to this peak in the beginning of 2025, about a year ago. So that's kind of the story of a lot of these big names. They're really taking a breather, and I've already addressed this. You can be a glass half full or glass half full guy or gal, meaning bullish, and make the case. And it's hard to argue. It certainly has its merits that this is all just, digestion, a big move up, working off the overbought conditions and allowing the fuel for the next advance up, right? It's hard to argue that. And we'll see which way it goes. Likewise, you can also say this is a very indicative of a topping action, especially coming after that big divergent high, and we're going to go a lot lower. All right, let's just leave it there. We'll see. So again, the takeaway is, like I said, I think, mild short position into the weekend is warranted. Net short. Now, that's the other thing, guys. When in the industry and in financial management, asset management, as far as when you're referring to, the stock market, you can have a net short or net long portfolio. It just means, and how I trade. Very diversified, spread my bets, longs, even within just the stock market, longs and shorts at almost any point in time. Long the most bullish sectors or stocks, short the most bearish. And so a market neutral portfolio is you have roughly an equal amount of offsetting long and short positions, right? And then net short means you have more shorts or more short exposure. It doesn't matter the number of positions, it's the dollar amount, or you have to adjust for everything. Like, I do the beta adjusted thing. Beta adjusted, it's like, take that, what was that? The strategy trade. I told you that it's super aggressive, high risk. So you don't need to put a lot. So the suggested beta adjusted position size for that trade, we took the lows yesterday, was a quarter to half position, and that means 0.25 to 0.5. And what that means, if you don't know, like a lot of the stuff on the site, just go to the resources tab here and go to the FAQ page right here, and then trading related questions, and it's answered right here. What is beta adjusted position sizing? And that's it. So I explain it there. It's pretty simple. I can just kind of, you can use things like the ATR, which is the average true range. It's an indicator, so how much up and down something goes. But I take it a step further. I can look at something that might have very low, ATR and low volatility for months, but it's in a pattern that's about to break out. So, it's not as simple as saying, oh, well, that's low volatility, you can use a full position size. Not if it's going to make an explosive move because volatility will expand coming out of that range. So when applicable, I'll try to let you know which ones I think you should beta adjust down. And if I don't mention it, just kind of know that any aggressive trade idea, you typically don't put as much in. It's all about risk return. And in a trade, if my final target's hit, it's going to be a 230% or so profit. You don't have to put a lot of money in to do well. To me, I don't trade for profit percentage gains. I trade for dollar gains. That's what's going to hurt or help my account. How much money I make, not to say, oh, I get 130%, or on treasury bonds, I might only go for a 10% or even an 8%, final target, but I'm going to juice that up because treasury bonds have such inherently low volatility. I'll take a triple position size. And so therefore that's the same as a comparable 24% gain on a regular position. If you get an 8%, you're tripled up your position size. So on this one, if you took a half position, then it's already up 32% in a day. That's comparable to a 16% gain. Or if you took the quarter, then it's still an 8% gain in one day, and that's the average annual return for 100 years on the stock market. You made it in a day. Oh, by the way, guys, at this point in time, this needs to be moved up. So just keep that in mind. Probably to entry. This is either a one-day wonder. I have no doubt the shorts are just getting burned alive right now, and those are the kind of trades I'd love to be in. And again, I maintain the targets. I tweak this one for you, but at this point in time, let's just say stop below max stop. I'll just write here, stop below entry. All right. Below entry. There's no way in God's green earth you should let a 20 something percent gain turn into a loser. Stop. Even though we're still well below our first target. Entry. I'll make a point. Yeah, okay, whatever. I'll be covering this one more. And as far as that, since I brought up strategy, this is a big, if Bitcoin, because remember, that's all strategy is. It's one of the treasury. It's the biggest, Bitcoin treasury company. It means they just hold Bitcoin, but they do it on a leveraged fashion. That's why it's going to be up more. It's the same logic of trading GDX instead of gold. You're just going to get a multiple of. So remember, this to me seems very indicative of a selling climax. It's the most, as I said yesterday, I believe it's the most oversold we've been in years on Bitcoin. This is the actual crypto BTC, and that's at support level about 73,500. So if it gets back above there, that would be a nice, really nice whipsaw. And again, when you look at volume patterns, you go to IBIT, and you can see here. I think you can see it there. There's a massive volume bar, and that's indicative of a selling climax when when it comes at the end of a prolonged drop, and then on very high volume in that final capitulation. It's like I said yesterday. I used that analogy on silver. It was like silver trade in reverse. Silver went parabolic, straight up on high volume, very indicative of a buying climax, and then that parabolic, that thing popped. I'll get to silver and gold later. Gold, if you want to look closely, is really not taken out. It pulled back to its parabolic uptrend line. Silver did break its parabolic uptrend line. So again, there's going to be, I told you guys, some volatility, back and forth grind. Probably a great time. If I didn't mention, it's probably a good time. We're still very profitable on the leverage trade, the CSL. But remember that we got, as I said, day one, the bulk of those gains, that initial drop I was looking for was hit. And so what happens is when you get the back and forth grinding action, which we might have for a while before this takes the next leg down, or if it's going to go up again, that is where you get the decay. And that's, again, found in the ETF, in the FAQ page under ETF related questions. This is where I explain how that decay works. So when you want to be long, that's why I had the confidence a week ago or whatever it was, to put the CSL short out there, because I had a very high degree of confidence that not only was silver going to drop, but it was going to drop in a nearly vertical fashion. And it did. So we outperformed. We made more, even if you would adjust for the leverage, take the leverage out, we made more in that ZSL in the initial pop than silver actually dropped. But then when it starts grinding, you're going to give, that's where the decay happens. And again, the math is explained in that FAQ page right there. So, over time, I'll have to maybe tweak these targets most likely. And I just wanted to update that. So I'll do, again, a more comprehensive update on the metals and miners later. Let me wrap this video up just to get out to you guys. I really wanted to keep this one focused on the market, and that's what I did. So we're going to wrap it up here. If you have any questions, feel free to shoot them to me under this post or one of the recent ones, and I'll get back to you as soon as I can. This has been Randy Finney with Right Side of the Chart. Have a great weekend.